Did you know that inflation and interest rates are often linked to each other? While some theorists believe that inflation and interest rates are inversely related, others believe that they are directly related. However, the general tendency is to have an inverse relationship. Confused? In this video, I will tell you everything you need to know about inflation, growth, and interest rates and how they are all linked. Hi everyone, I am Prarthana from Clear. We are India's largest tax and financial services platform where we have served more than 6 million tax filers so far. Subscribe to our channel to get investing tips and learn more about growing your money. Inflation primarily happens when there is an increase in the price of everyday goods and services. The inflation rate refers to the prices at which the prices of goods and services rise. This means that if the inflation rate rises by 2% on an average, then your spending on shopping will be 2% higher than the previous year. Leveraging the interest rates is one of the key tools the central bank and policymakers have at their disposal to either boost or slow down the economy. The Monetary Policy Committee (MPC) in India sets the benchmark interest rate. Interest rates are lowered to increase liquidity in the market with the assumption that increased borrowing and investment would be beneficial to the economy. A price index is used as a proxy for the price level in order to calculate the rate of inflation. A price index is a metric that quantifies the average price of a set of goods and services. The Consumer Price Index is the most extensively used inflation rate indicator, with many countries using it. The CPI indicator is made up of a basket of goods and services that represents a typical urban household's purchasing habits. Take a look at the formula for calculating inflation.
CPI is equal to the cost of basket at current prices divided by the cost of basket at base period prices multiplied by 100.
In a fast-growing economy, earnings rise quickly and an increasing number of individuals have the financial means to purchase the current items. Prices of existing items rise as more and more money chases them. Inflation, in other words, rises. The central bank of a country often raises interest rates in the economy to keep inflation under control. Saving becomes more beneficial when interest rates rises, which encourages people to spend less and save more. Money is taken out of the market and the rate of inflation moderates as more people choose to save. Did the explanation make sense so far? If it did, write clear in the comment section below. When economic growth slows or stops, people's incomes suffer as well. As a result, less and less money is being spent to acquire the same number of goods. This causes either a deceleration in inflation, that is, prices grow at 1% instead of 5%, or a contraction in inflation, that is, prices reduce by 1% instead of 5%. In such circumstances, the central bank lowers interest rates to encourage expenditure and, as a result, enhance economic activity. Lower interest rates imply that it is less profitable to keep money in the bank or any similar saving instrument. As a result, more money enters the market, supporting both growth and inflation. Let us calculate the CPI for cordless vacuum and handheld vacuum. The following tables will show you what the prices of these equipments were in 2020 against the current price in 2022.
The previous price for cordless vacuum in 2020 was ₹1,000. The previous price for handheld vacuum in 2020 was ₹1,500. So the total cost of the basket was ₹2,500.
Now, let us look at the current prices of the same items.
The current price for cordless vacuum in 2022 is $2,000. The current price for handheld vacuum in 2022 is $2,500. The total cost of the basket was $4,500.
According to the formula shown earlier, CPI is 180. To find the change in the Consumer Price Index, subtract 100 from this final result. This allows you to subtract the baseline and see the change in product pricing. The price index is 80% over the base period, hence inflation rate is 80%. So, let us look at the difference between inflation and interest rates.
Firstly, meaning inflation is defined as a persistent increase in the price level in an economy. Interest rates are monetary measures used by central bank to control the money supply and credit in an economy. Secondly, calculation. Consumer price index is generally used as a measure for the inflation rate in an economy. The interest rate used by RBI is the rate at which central bank lends money to the banks. Thirdly, factors. Inflation is dependent on the money supply in the economy. The amount of money supply is controlled by the central bank using their benchmark interest rates as a measure to control the money supply and in turn inflation in an economy. The benchmark interest rates are decided based on various macroeconomic factors in a country. One of the factors is inflation. Interest rates are increased if there is high inflation in the country. Also, exchange rates are a factor central bank considers when increasing or decreasing interest rates. Fourthly, effects of high inflation. Higher inflation will lead to higher prices of goods and services, higher costs of living, higher borrowing costs, weaken the currency, etc., and hence generally has a negative impact on the economy. Higher interest rates are set by central bank to control inflation. With higher interest rates, borrowing costs are more and hence consumers save more rather than spending, which slows the economy and decreases inflation. Fifth, effects of low inflation. Lower inflation is also a concern as it indicates a slowdown in the economy and may bring a recession. Persistent low inflation can lead to higher unemployment, reduced demand for goods and services, which affects the profits of businesses. To tackle reduced demand in the economy, central bank decreases interest rates so as to stimulate consumer spending and borrowing in the economy.
So folks, I hope you understood the difference between inflation and interest rates. You can start your investment journey by downloading the Black app by ClearTax from the link given in the description box below. Download the Black app as it will help you grow your wealth and invest wisely. Also, don't forget to subscribe to our channel for more finance related content. See you soon in the next video. Take care and goodbye.